We had a decent session today. Dow gaining 216 points, S&P climbing 0.95%, the Nasdaq jumping 0.73%. But what really matters is that we got yet another red-hot consumer price index number. It makes it untenable for the Federal Reserve to keep interest rates this low. From now on, the only question is the pace of the rate hikes and the tone of the Fed's language. Now, the bulls have to be heartened that the market didn't fall apart when these numbers came out, and instead actually rallied, with the S&P having a record close. Pretty extraordinary, if you ask me. But maybe the positive reaction is, well, too bullish in light of events to come? And that's why our game plan for next week actually starts all the way on Wednesday when I start discussing it, because that's what matters the most, because Jay Powell holds his press conference after the open market committee meeting. Last time we heard from Jay, he said he'd stop describing inflation as transitory and speed up the tapering of the Fed's bond buying program. Tapering, just forget this term from now on. What we're talking about now is rate hikes. Going forward, I think he'll move up the timetable for rate hikes. We just don't know the cadence of those rate hikes. If Powell says it's time for a series of lockstep rate hikes, then today's rally was definitely premature, and the stock market's going to get hammered. I want you to keep that in mind. But if he traces out the inflation and separates what can be controlled from what can't be controlled, then he may spare us from a term you're going to start hearing a lot starting next week. And it's chiefly going to be said by hedge funds that are short the stock market. And that is that we may be having a crash landing. Yes, that's the term you're going to hear. It's going to be a crash land. These are from people who are typically short the stock market. We've seen enough macro numbers and spoken to enough executives to know that inflation is now rampant, though, which means the Fed really does have no choice to act. However, as I'll explain later, that doesn't mean you should sell everything. The market can rally when the Fed's tightening. It just means different groups will go in and out of style in the Wall Street fashion show.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.